Hi, I'm Kep Kepner CPA here in Dallas. We've been spending a lot of time in the last month or so educating the clients of ours that have 50 or more employees because they are absolutely affected by Obamacare. And if they do not offer health insurance, they're facing a $2,000 per person penalty that's not deductible. So it's a big deal. And we are concerned that our clients are being wise in their choice of how they address this matter. That being said, let me read something to you. United Health Group expects major losses on its business through the Affordable Care Act exchanges and is considering withdrawing from those exchanges. Now think about it. This is the largest healthcare provider in the country, and they're talking about getting out of the Obamacare business. That is significant. They have projected to Wall Street about a 10% reduction in their earnings due to the exchanges. And quite frankly, if the exchange business where you go to get health care under Obamacare doesn't stabilize, you can look for United Healthcare to get out of the business. So how does that impact you? Well, it impacts you because if you are an individual with health care from Obamacare through United, you're going to be without a supplier. If you're an employer, it affects you because if you have employees that want insurance and they can't get it effectively in the marketplace, you're going to feel the pressure. And it affects you as an employer if you have an employee who can go to the marketplace and get coverage for a price that's less than you offer it to them, then you're going to pay a penalty because you didn't offer them minimal essential coverage. Incidentally, minimal coverage is calculated by taking your lowest paid employee times 9.5%. So for example, you have an employee that makes $20,000 a year. 9.5% of that is $1,900 or about $150 a month. If you offer that to an employee, you're going to be okay. I mean, you're going to have to offer that plan, and you're going to have enough members of your group to provide for it. But let's say your plan was going to cost your employee $200 a month, and the employee then went out to the marketplace and could find it for $180 a month. You're dead in the water. The fact that the employee bought the health insurance coverage on the marketplace puts you as the employer on the radar for not offering minimal essential coverage. And there you go. Get out your checkbook because you're going to pay some penalties. So the Obama administration aims to have about 10 million people covered by the exchanges by the end of 16. Originally, the estimate would be maybe 20 million by the Office of the Budget. We'll have to see how all that works. In a recent analysis, McKinsey & Company, the consulting firm, found that in 14, the first year of the exchanges, health insurers lost $2.5 billion on offering the health coverage. Now come on, do you really think they're going to continue to operate at a $2.5 billion loss every year? It isn't going to happen. As they exit the program, there are going to be all kinds of strains on the system. And it's going to prove my wife right. When she signed up for Obamacare and went to see a doctor, the doctor was running around in his office in dirty tennis shoes. That was all it took. She withdrew from Obamacare and she said, "That's okay, my husband's going to pay the tax penalty." So I'm paying the penalty because Obamacare sucks. But I don't want you to think I have any preconceived notions about this. if you want to talk about it, give us a call. Thanks.